The Texas REIAs provides data, right? Because as real estate investors, you always want to be a student of the market. All this data is provided by the Texas A&M School of Real Estate and a number of online resources. We report the data. We don't make the data. I'm going to tell you, it is unbiased data. A lot of people that report data always have a bias. Like, no offense, but the Board of Realtors is always saying the market's going up. And sometimes they're right and sometimes they're wrong. When the market's going up, we're going to tell you the market's going up. When the market's going down, we're going to tell you the market's going down. When it's going sideways, we're going to tell you it's going sideways, because we have plenty of ways to make money up, down, or sideways. But it's good to know where the market is and where the market's going. We have some new people joining us online, so I'm going to restart the online as well. So welcome everybody to the Texas REIAs, Real Estate Investor Association meeting, the largest network of real estate investor associations and real estate investors in Texas, going back to 2003 with 150,000 members, participants, and attendees. And we provide all kinds of training and resources to real estate investors, including market data. And we're going to share some market data with you right now. So what's going on in Texas? Well, I'll give you the high-level numbers. The average price house in Texas is $424,000. It is up 1% from 1 year ago. It's flat. And the whole year went up 1%. Median price in Texas, $332,000. It is down 1% from 1 year ago. And the whole last year, flat. Now, if you are just going to look at one number that's the barometer, like what's going on in the market, the number to watch is this one right here in the middle. Months of inventory. What does that mean? The way this is calculated is as follows. If you took all the houses for sale in the MLS and you stopped adding any more, we're not going to add any more. We're going to just take what we've got for sale and we're going to sell them all until they're gone, until the shelves are empty. So we sell the last one. How long would it take to sell all the ones we got? The answer, 5.5 months, which is the average amount of time it takes to sell one house. Now, that's the average. Some are much faster, some are much longer. That's why they call it average. 5.5 months. Now, let's put that into perspective. What does that mean? They say if there's less than 6 months of inventory, you're in a seller's market. If there's more than 6 months of inventory, you're in a buyer's market. What kind of a market are we in right now? Technically, we're in a seller's market. So people are like, it's a terrible market. It's not as good as it was, because last year is 4.8 months of inventory, which was better seller's market. Now it's not as good of a seller's market, but we haven't been in a buyer's market in years. Why not? Well, let's talk. What's going on in Texas? What is the biggest change that's gone on in the real estate market over the last several years? Interest rates. Interest rates. What happened to interest rates? They went up. Interest rates went up. Now, when interest rates go up, what does that do to home prices? Does it make them go up or down? Who thinks when interest rates go up, home prices go down? Who thinks when interest rates go up, home prices go up? Who's not voting? They're both right. Yeah. Here's something about real estate. Real estate doesn't care about interest rates. Real estate cares about two things, supply and demand. That's it. It's pure supply and demand. Now, for sure, when interest rates go up, mortgages go up, payments go up, houses are less affordable. Fewer people can afford them. And when fewer people can afford them, demand goes down. And when demand goes down, that pushes prices down. Absolutely. But there's an offset. What's the offset? A couple of offsets. Normally, 2/3 of the houses you see for sale are resale. 1/3 are new construction. Right now, it's inverted. Why is it inverted? How come people aren't selling their house? because they got a 3% mortgage and they don't want to give it up. The economy is not bad. People have jobs. People should be saying, honey, let's get a bigger, nicer house. But they're not. They're saying, honey, we got a 3% mortgage. If we trade up, we got a 6% mortgage, 7% mortgage. We're not trading up. So they're staying put. And all of that inventory is being held on the sidelines. And when there's less supply, what does that do to home prices? Pushes up. So we got things pushing down. We got things pushing up. We got another thing pushing up. Last year, California lost 500,000 people. Last year, Texas gained 500,000 people. Where do you think they went? And there's another 12 million people, we don't know where they went, but there's a bunch of them here too. And they all need a place to live. And when you have all that extra demand, what does that do to home prices? Pushes up, right? It pushes up. And then I don't know if you guys know this or not, on top of all of that, we are in the middle of a housing shortage. Who's heard of that? We have 6 million fewer houses than we need. And people need a place to live. And we're not building enough, right? And when you have a shortage of supply, what does that do to home prices? Pushes up. So yeah, the demand went down and the supply went down. And what happened to the prices? Flat. Yeah, that's why it canceled out. Now, if demand went down and supply stayed up, boom, prices would have crashed, right? Or the other way around, right? When demand goes up, right, which we had happen a few years ago, and we didn't have enough supply, boom, prices go up. So history, 2021 prices went up 18% in 1 year. 2022, 10.7% in 1 year. 2023, it all flattened out. 2024 is flat again. Actually went up about 2% by the end of the year, just a little bit, not much. Why did it go up 2% at the end of the year? What happened to the interest rates at the end of 24? They went down a little bit and prices went up a little bit, but not much. And we're coming into the end of 2025, same thing. It's been a flat year. It's been a flat year. So where are we going? I'll give you some other data. This is Houston, by the way. Houston looks a lot like Texas. Average price 424, up 0.5%. Median price 330, down 1.5%. It's flat. 5.2 months of inventory, a little better than the state at large. Yeah. Lease listings are up a little bit. Lease prices are flat. What does that mean when lease prices are flat? Apartments empty, apartments full. They're pretty full. They're not over full. New listings are up 24%. We have been building apartment buildings because everybody's moving to Texas, but we still don't have enough. Apartments is a whole different animal. They should be hurting because of what happened to interest rates and cap rates. The thing that's saving them is really the migration. Everybody's moving to Texas. So the properties are full, right? And we've got a lot of demand. Market drivers. What's driving the market? The economy. Now, the economy does not directly affect real estate. There's a little bit of an effect. During the Great Depression, prices went down a whopping 6%. Not much. During the Great Pandemic, another 1 in a 100-year event, prices went up 30%. It really wasn't the economy that drove it. It was supply and demand that drove it. But there's a little bit of a correlation. So these things are all color-coded, red, green, yellow. Green is flat. Green means push up price. Yellow is flat. Red is down. Consumer confidence, we're kind of right in the middle. We're not like confident. We're not like unconfident. They measure this on a 0 to 200 scale. We're 97, right in the middle. Unemployment's pretty good in Texas. Texans have jobs. Job growth, pretty good in Texas. Stock market doesn't affect real estate other than when people see they have money in their 401k, they feel a little more confident, a little more likely to buy real estate. Business cycle growth, great in Texas. So Texas is doing pretty good economically. What else? Affordability, interest rates, for sure. Interest rates went up, right? And houses are less affordable. So that's pushing prices down. Price trajectory is flat, so it's neutral, right in the middle. What else? Supply, active listings flat, months of inventory, kind of right in the middle, 6 months, 5.5 months. Housing permits trajectory, we're not building enough houses. That's a problem. And another big problem we have is construction labor growth. We have a major problem. Contractors are dying. The average general contractor is 58 years old, and the age keeps going up because they're not getting replaced. So if you have a teenager, here's some advice. Don't send them to college. Buy them a hammer. I'm serious. I went to college. My parents went to college. I got a teenage boy. I don't really care if he goes to college. I know some plumbers that are pulling down $1 million a year. $1 million a year. So go get a degree, get a couple $100,000 in student debt, get some crappy job for $65,000 a year working for a jerk, or become a plumber and make $1 million a year working for yourself and go on vacation wherever you want to really nice places. So yeah, seriously, we got a problem with contractors. Housing demand, closed sales trajectory flat, pending sales trajectory flat. In migration, this bullet should be half the page. It's the biggest bullet in the page. Huge migration. People are moving to Texas, and everybody that moves here is going to have to live somewhere, in an apartment building, in a house, in something. And we're not building enough. And that is what's making Texas, that's what's keeping this market going, is the migration more than anything else. Wild cards, tariffs, immigration, whatever. So I'll give you our forecast. The forecast, by the way, again, it's not my forecast. I just read the forecast. But I will tell you this. I'm pretty proud of the forecast. The Texas REIAs has been giving market forecast every year for the last 20 years. And it's always been spot on. And it's not because we're like geniuses. To be honest, it's because this is not that hard. Predicting the economy is really hard. Predicting the stock market is impossible. Predicting real estate, not that hard. Because it's all supply and demand. And we know all the variables. We know exactly how many people live here. We know how many people are dying. We know how many people are having babies. We know how many people are moving here. We know how many houses we have. We know how many houses we're building. We know how many houses we're going to have. We know everything. The only thing we don't know with absolute certainty is what interest rates are going to be in 6 months. And even with that, you can take a pretty good guess. So it's not that hard to predict real estate. So here's the prediction. If you were waiting for some exciting market crash, that was probably it, and there wasn't much to it. Interest rates will probably go down one more time at the end of the year in December. That's what the experts say. Not a 100% chance, but about a 75% chance. And or in early next year. Mortgage rates will probably drop in the 5.5% rate. Things like the 50-year mortgage makes it the equivalent of a 5% or less rate. Sales will probably flatten out. We should end with the market in terms of sales up 1 or 2%, not much. Prices will probably be flat to up 1% compared to 2024 and 1 or 2% compared to 2025. So in other words, the market is continuing to just go flat until something, maybe in the future, changes it. But we don't see much happening. Now, here's the good news. Sometimes it's easy to buy and hard to sell. Sometimes it's easy to sell and hard to buy. It is never easy to buy and easy to sell. But in this kind of a market, it's not that hard to buy and it's not that hard to sell, which for real estate investors is a wonderful thing. Like a lot of people are like, oh, I wish I got in 3 years ago. 3 years ago, it was impossible to find a deal. It was impossible, easy to sell anything, right? Impossible to buy, right? And then there's other markets where it's just impossible to sell and easy to buy. Right now, we're right in the middle. Which strategy works best now? Yes. Yeah, all the strategies work in this market. So if you're interested in being a real estate market, this is actually a really good market for real estate investors because we can do anything in this kind of a market.